Hej och välkomna till Insight Direkt och ett nytt rapportsläpp. Den här gången med NewCell som precis släppt sin helårsrapport. Efter att bolaget har presenterat sina siffror så kommer de att svara på frågor av analytiker som vi har kopplat upp oss med. Det finns även en möjlighet för dig som tittar nu att ställa frågor live då till bolaget. Det gör ni via chatten och så ska vi försöka hantera dem i avslutningen av den här sändningen. Då delar av ägarna och delar av ledningen är engelsktalande och presentationen är på engelska kommer vi nu att gå över till just engelska. It's with great pleasure that I'm able to present the CEO for Renewal, Patrik Lundström, and CFO Toby Lawton. So without further ado, Patrik, please take the reins and walk us through the presentation.
Thank you very much. Welcome everyone to this Q4 and the full year of 2022 presentation. I'd like to start with our purpose, of course. Our purpose is to make fashion circular. We are the missing link from a otherwise linear value chain where we're pumping oil, cutting down trees, agriculturing of cotton, and then running it through the value chain and then put it into landfill or incinerate it. So our purpose is actually to create circularity in that value chain. 2022 highlights. NewCell 1 is now built. We have started it up and we have now had our first commercial sales. So we had the COD in Q4, October, November there, and we also have made our first deliveries to customers in the end of December. The ramp up to 60,000 tons is underway and the 120,000 tons will be the second step. During the year we have done 2 directed share issues and that has been in order to secure the ramp up to the 120,000 tons but also to fund the delayed startup and higher capex and more cautious ramp up assumptions. We are also very proud to have a closed long-term agreement with Lenzing of between 80 to 100,000 metric tons over a 4-year period. And that has approximately value of, give or take a few, about 1.5 billion Swedish. This means that we are covered with about 2/3 of the 120,000 ton plant. So we have actually sold already 2/3 of that plant capacity. We have also signed a working capital facility for about 150 million. And during the year or in the end of the year, we have also continue having really good production at the Kristinehamn plant, and we have beaten quality record month after month, but also capacity and output goals. This is actually very important. I'd like to bring it up again, and the reason is that when you're producing in a pilot plant at 92% in spec in those volumes, it actually shows that technology works and that we have a very good start and have collected a lot of data in order to start up the plant. As you can see, we have already supplied to customers, although we just started the plant in Q4. We have a total capex for the total of NewCell 1, the 120,000 ton capacity, approximately 1.4 billion Swedish. So a little bit about the financial numbers. Toby will come back to this in a minute. The total sales in 2022 was 13, that's up from 3 the year before. EBITDA is minus 252, which was minus 121, and that is of course the reason we are operating and starting up the plant, plus that we have a lot more people in our organization 2022 compared to 2021. The cash flow from investing activities is minus 880, of course, in relation to the building of NewCell 1. And the earning of per share and is about minus 9, but I will not go into that, and of course we have decided not to have any dividend. The financial summary of Q4 2022 is that we have about 5 million of sales, up from 1 million the same quarter last year. And from those 5 million, it's about 800,000 that comes from the supply from the Ortviken plant. And I think that is a very important milestone to look at. We also have an EBITDA in quarter four about -93, which was -59 the year before. Looking at the production ramp up, in December we produced about 650 metric tons at NewCell 1. That was about approximately 300 metric tons in spec, and we delivered 55. In January we produced about 1,000 metric tons, where 500 metric tons was in spec and 190 metric tons was delivered. We also have materials that we're filling up for future deliveries to customers. If you look at, of course, the 60,000 tons, that's approximately 5,000 metric tons per month. So we have a long way to go. I mean, we are still in the ramp-up curve, but we are currently at approximately 20% capacity utilization, which I think is a strong indication that we have the situation fairly under control. But I'd like to also say that we have routes to go and we have things that we need to do in order to ramp up the plant all the way to the 60,000 tons, which we see will be done throughout the year. Circulose, I mean, we make fashion circular, but we have done a lot of launches. We have got a lot of attention. I mean, some of the brands, this is just a few. We are launching with PVH, Ganni, Zara, H&M again, of course, Filippa K, Jade Cropper, Pangaea, and Levi's, and many others. And this is actually a very strong signal that our technology, the materials are needed. And we see it, of course, in society in general terms, that sustainability, circularity is important. We also see it from the politicians. Circularity has to happen. In Europe, we have seen those decisions already been taken, but we also see it in the Americas. They are moving in that same direction. The whole world is moving in that direction. And here we are trying to do our part for that circularity. So the purpose of NewCell is an important one for the whole industry. We also got a lot of attention, of course, when it comes to media. I mean, we have international media. We have actually focused quite a lot of international media because our customers are international. We are a Swedish company, yes, but we are operating on an international market. So we've had interviews and visits from CNN, Vogue, Women's Wear Daily, etc., etc. But we also have, you know, a big piece from the New York Times. Will we ever be able to recycle clothes like aluminum cans? That's what we are aspiring to. And we know that in Europe we also have that legislation coming on stream now, and all member states are starting to prepare that. Milestones that we've achieved here in NewCell 1, you know, we have negotiated all the supplier contracts, refurbished the whole plant, you know, we installed all the unit operations, and we started up the full production line. Of course, all these other things have also happened. But in quarter four, we had the commercial operation date, the COD. We have made the process optimizations, we have made commercial production, and we made our first sales. But we have, as I mentioned earlier, we have some way to go, and that is to ramp up the plant to the 60,000 tons, and then we're going to expand to the 120,000 tons towards the 30% EBITDA, as promised. But also, we need to start looking into the future growth of the company and also how to ramp it up to the 360,000 tons as previously communicated. We are planning, for your information, a capital markets day, so for investors and owners to come and see the plant and to ask us questions on site, and that is planned for 11th of May now. So we would look forward to welcome you to the plant in Sundsvall at Ortviken and take you through the whole operations, and you can see with your own eyes what the team is doing. And with that, I'd like to hand over to Toby for further comments on the financial numbers. Toby.
Great. Thanks, Patrik. Yeah, good morning, everybody. I'll take you through some of the numbers, and I won't go through every number on this page, but just to highlight a few, we have net sales for the full year. You can see on the right side we have the full year of 13 million versus 3 million last year, so an increased sales in the year, but of course this is before we've got significant revenue from Ortviken, so it's still limited in terms of revenue, even though in the fourth quarter we also had 5 million of revenue, including that nearly 1 million from Ortviken with the first customer deliveries, as Patrik mentioned. EBITDA for the full year minus 252 million. This is the ramp up. This is really the period when we've been ramping up the plant, so it's ramp up losses, which is really the main element of net profit of minus 300 million. Cash flow from operating activities, which is a combination of the EBITDA and working capital, where we've built up primarily raw material stock ahead of the ramp up. So that was minus 398 million for the full year. And then the investing activities, which is really the capex of building the site in Ortviken, was 880 million SEK for the year. Total assets at the end of the year 1.6 billion, driven really by the fixed assets that we're building. Equity 864 million, and then we have net debt at the end of the year of 517 million, which means the equity ratio of 47.1. And then finally, the average number of employees, you can see for the full year we were 130, in quarter four 139, so we're fully manned up and we have been for most of the year actually, fully manned up for the operations of Ortviken for the 60,000 tons. All right, just a bit more on then the income statement, and here it's from left to right, so yeah, please bear that in mind, and showing the development per quarter basically, and you can see the revenue development. It's increased in Q4, but still limited, because that will come up significantly with the increasing volumes dispatched from Ortviken. And then we have change in inventories, which I won't go into. Variable costs, we had a big variable cost in quarter four. We had a high energy cost, which was higher than normal in December particularly. And we were also running the plant and doing test runs and so on, with a lot of the variable costs associated with full production, but without having produced saleable stock. So that's the variable cost of basically a full operation without having produced the finished goods at this stage. So we would expect the gross profit then to be more or less the low point in terms of gross profit. As we start to generate revenue, of course, then we offset the variable cost with revenue. Fixed costs a bit higher at 65 million. We took a one-off item there as well for restructuring in Kristinehamn, which Patrik mentioned. And total then EBITDA for the fourth quarter of minus 93 million. And again, we expect this to be the low point, because as we go forward, we're not going to be increasing costs significantly, but we will be increasing the revenue as we start to ship to customers. All right, I'll go over to the cash flow. And here the first line is the EBITDA, which we've just talked about. The second line is then the cash flow from operating activities before changes in working capital. And as you can see, this is almost entirely driven by the EBITDA. So that is, there's a few small items as well, but it's basically the EBITDA. And then we have the changes in working capital, which is driven by the ramp up of the operation, and particularly the ramp up of raw material stock. So we've been investing in working capital through the year. We have raw material now to last us for about 6 months, so we don't expect to have to invest significantly in raw material stock for the coming 6 months. Which means that we should, we're on the journey now to transform the EBITDA to break even and go positive, and also the cash flow. And given the investment in raw materials, I would expect us to turn positive on cash flow before we turn positive on EBITDA, basically. So it should come quicker in terms of cash flow. Then we have the investing activities, where we've invested 880 million during the year. We invested 312 million last year, and I'll come back on the total capex picture. A quick word on the financing situation. We have total cash and cash equivalents at the end of the year, and here it's on the left-hand side, of 293 million, and financial liabilities of 810 million, which means our net debt is 517 million. And a word on what's undrawn credit facilities, which are not included in those numbers. We have 50 million undrawn in the working capital credit facility, which is available to us, and we still have 11 million left under the ICA loan as well. So those are available for us to draw. And I can also mention that since the year end of those cash held in reserved accounts, 50 million has been transferred to the cash and bank line, so for the company to use as well. And then my final slide here to show the status of the capex, and basically taking into account 2020, 2021 and 2022 altogether. We have invested a total of 1.226 billion so far in Ortviken. And as we've mentioned also last quarter, we expect the 60,000 ton line to cost approximately 1.3 billion, and then 1.45 billion for 120,000 tons of capacity. So we expect around 50 million of the capex for the 60,000 ton line to come in Q1, which will largely complete the 60,000 ton line, and then we have around 24 million reserved for later in the year if we need to correct some things, but not yet committed. And then the rest is for the 120,000 ton step, which is not yet initiated. So no change. All right, and with that, I think, welcome, Patrik, back.
Excellent. Well, thank you for that. Very thorough, I think. And I know that we have 4 analysts eagerly awaiting. So we will try our first caller here, and that will be Carnegie's Sofia Sörling. Sofia, can you hear us?
I can, thank you. And hi, Toby and Patrik. I have a couple of questions from my side. To start with, I have a follow-up question here on capex and cash flow. So you have already collected the 100 million to add this another investment of 60,000 tons in capacity. My question is, when do you expect to start to use that money and invest in the additional capacity of 60,000 tons at NewCell 1? And when do you expect this additional 60,000 tons in NewCell 1 to be finalized and you will be able to utilize this another capacity? That's my first 2 questions.
Yeah.
Should we? I can start. I mean, the additional 60,000 tons is an investment that is not going to be like a staircase. It's going to be smaller steps as we go forward. We expect that to happen throughout the year, and we are. The plan is that we will have that capacity installed somewhere in the first half of 2024.
And I would say where we are right now, as we've said as well, we're ramping up to 60 and fully focused on the ramp up to 60. We've not initiated the step to 120,000 tons because we want to be secure that the ramp up to 60 is secured, basically, is going well before we commit those funds. So we're still not at that stage yet because we are in the early stages of the ramp up. And there, as we said, it's a ramp up is hard to predict. So I think we should be honest about that. It's no one can make any promises, but we expect the ramp up to be to 60,000 tons to take the year, and basically then we get to the 60,000 ton level towards the end of this year.
All right. Okay, thank you. And then I have a question on your inventory. It's quite high per the end of Q4. And what is your expectation on larger purchases in raw materials during 2023? Or perhaps in a broader question, what is your expectations on net working capital during the following 6 to 12 months?
I'll take that. I mean, basically raw material inventories we don't expect to go up during 2023, except maybe towards the end of the year when production is stronger. So raw material inventory will come down. It won't even go up towards the end of the year, but we maybe will start buying in new raw material towards the end of the year, but we won't be buying in almost anything during the first half of the year. But so that's the raw material line. Then as we ramp up production, we will start having some finished goods stock and some receivables, which will have an increasing balance. But overall, we would expect working capital to come down during the first half year as we ramp up production, as we start consuming raw materials. And that's why I say, Sofia, that I think we should turn positive on cash flow quicker than we turn positive on EBITDA because of that effect, basically.
Yes. All right. Okay, thank you. And then 2 questions on ramp up, actually. And if you could give us some more guidance on your current ramp up expectations, and for example, when do you expect to reach almost like 90% of your initial 60,000 tons capacity? Will it be like in Q3 or in Q4 this year, or even in the beginning of 2024? And also a second question, it's less than 2 months since your first shipment of circles from NewCell 1, but has that reached your customer in Asia yet? And if so, what has the feedback been from the customer? Thank you.
I can take that. Taking your first question first, we have the material is on the way, hasn't received or reached the customers just yet. We expect it takes approximately a month for them or so to actually run the material. So it's underway. On the other hand, we're sending samples to our customers, smaller samples and air freighting samples and so forth. And that's an ongoing discussion on what is the quality, what is it that they need, and so forth. What I think you should look at is that the material that we sent from Kristinehamn, in many aspects, is not as good as the ones that we're sending from Ortviken. However, there are other parameters that we're looking at and so forth. So I feel pretty certain, that the material eventually will be that works. But of course, you probably need to tweak it a little bit. So we need the customer feedback, and this is part of the ramp up of a plant. Listen to the customers, and then doing some adjustments, and then go forward, sampling back and forth again before you get the perfect quality. And then, sorry, I forgot your first question. Could you take that again, please?
Yes, if you can give us some more guidance on your current expectations, when you will reach, for example, steady state for this initial 60,000 tons in capacity. For example, when you will reach perhaps 90% in utilization rate.
You could take that.
No, I think we can't really say any more, I'm afraid, Sofia, than I mentioned that no one can give any promises. It is uncertain, but we expect the ramp up to take this year. So towards the end of the year, we expect to be at that level. Yeah.
Okay. Yep. Thank you.
Yeah. Well, excellent. Thank you for that, Sofia. And then we will swap over to Handelsbanken, see whether Christian Kopfer is with us. Can you hear us?
Yeah, I can hear you. Thank you very much.
Excellent.
Good morning.
The floor is yours.
Thanks for that. Good morning, Patrik, Toby. A few questions from my side. I think follow up on Sofia's question on the inventory. Maybe, I guess, Toby, you can perhaps comment on that. How much of that almost 180 million is, call it finished goods or deliverable material to customers?
Very little. I mean, so as Patrik mentioned, we produced 600 tons in December, and we shipped 55. So the balance there is basically is finished goods, partly in spec, so A grade, and partly B grade, but still finished goods. But that's a very limited balance compared to the raw material. So.
Right. Okay. Fine. Yeah. How much do you think you will need in finished goods? I guess you don't need so much finished goods in your inventories going forward. Yeah.
No, we don't expect, because we expect to be selling mainly X works, or effectively X works, and therefore holding, say one week's stock I think is a reasonable estimate. Given we should once we're fully up and running and we've got the order system flowing. In the beginning, it's a bit longer because the production level is lower and you need to fill up orders. But it shouldn't be. We don't expect to hold a large finished goods stock. No.
Right. You mentioned, I think was you, Toby, you mentioned the difference between that you have a top-notch quality and then you have some B-grade material. When do you think you will start to deliver the lower grade material to customers?
The lower grade materials, I mean, if you look at that, there are possibilities. We are investigating possibilities and so forth. So we have two options with that material. Either we sell it to customers, or we rework it in the process. So that's kind of ongoing discussions with different type of customers that could take other type of materials that doesn't have the same quality parameters as, for example, the textile industry or dissolving pulp or viscose production. So that we are investigating that, and there are a couple of interesting areas where we could actually sell that material. But that also takes some time, because that's kind of a quality for them that is very interesting. So that will take a little bit of time before we have actually got that, approved by them. But then, of course, we have the other options would be to rework some of that material. So we don't feel worried about it.
We have shipped, I would also add, we have shipped some of the B grade as well. It's not just the A grade, it's majority A grade, but so some is going, but it needs to go through this process, as Patrik said. So,
So the base case is that you will start to deliver more B grade rather than running it through the process again.
Ultimately, we want to have a much higher proportion of the production is A grade pulp, of course. That's the key target. But so in the long term, we don't expect to have significant volumes of B grade.
Right. And you mentioned, Toby, that you expect to release some working capital next couple of quarters. Yeah. So can you say anything with regards to absolute numbers?
I think we don't give forecasts. And it's very hard to say really. But I think it's in relation to the ramp up of volume. We will consume the raw materials basically, and we as long as we're getting it out the door to customers, then we're not building up any stocks, and we'll have some receivables, but we expect to have good payment terms on our receivables as well. So we expect to be able to monetize our receivables in less than 1 month. So
right.
So it's all dependent on raising that volume and raising that revenue, and then the working capital will start to come down.
Okay. And I think you still expect EBITDA margin to turn positive in beginning of second half next year. This year, sorry. But when it comes to gross margin, if you just take the sales minus cost of goods sold, which in your case is raw material inputs, when should we expect gross margin to turn positive? Is it during Q1 or is it before June?
I'm reluctant to give forecasts, but what I could say is, we've talked about the ramp up. We expect it to take the year, and we need to get to about 65-70% capacity, so 3,500 tons per month, to be at the break-even point. But I would say with gross margin, it's probably halfway towards that. We come to positive gross margin, or even before that. So.
50,000 tons or something like that in annual.
In annual question.
Okay.
No, I think before. So the break even on EBITDA is about 3,500 tons per month. So that's about 45,000 tons per year. That's on EBITDA margin, but on gross profit it should come less than half that. So.
Right.
So
okay.
So I think we're not there with 1,000 tons per month, which we saw in January, but we get to 2,000 tons per month. I would think it needs to be revenue again. So January is 1,000 tons production.
Delivered volumes.
Yeah.
Slightly lower than 2,000 tons a month.
Yeah.
Okay. All right, cool. That was all for me. I think so. I leave the floor open for more questions.
Thank you. Thank you very much, Christian. And now let's switch to Niclas Wahlström from Pareto. Niclas, can you hear us?
Yes, I can hear you. Can you hear me?
Yes, we hear you loud and clear. And poised for rapid growth was one of your previous titles. You're sticking to your guns?
Yes. We just came up with an updated recommendation as well, with a slightly increased target price here, like a week ago or something. So, yes.
Please go ahead.
Yeah, so just a quick follow-on question on working capital. You mentioned there being a positive effect on cash flow for the first half. Do you expect for the full year 2023 this to be a positive effect, or do you still expect there to be some negative effect on the full year?
No, I would expect overall for the full year it still to be positive, because we wouldn't be holding the level of raw material stock that we have now at the end of the year, even with full production levels.
Okay, great. Then going more specifically into questions related to price. When could we expect an update regarding realized prices for both your product, and also what levels of COGS you kind of are seeing now relative to how you guided at the start? I've seen it in your recent presentations. You have not provided any guidance for what you expect for 120,000 ton capacity. Maybe you can give some flavor for that.
We are going to be very careful with giving price, open prices on the market. You need to calculate that yourself from the P&Ls. The reason is that when we're in negotiations, and we are of course in several negotiations, that come back and bites us. We gave a price when we did the IPO, and that was for the community, the investment community, to be able to calculate on the full case. Since then, we have increased prices. Successfully, we see there is a willingness to pay a higher price, but I don't want to go in and talk about specific prices for that plain reason that it actually hampers our negotiations with other customers.
Okay, great. But more specifically, with the contribution margin you previously mentioned around, I think it was 43%, is that still expected to be at similar levels, or is it slightly different?
Yeah, no, I would just say when we're fully ramped up, we still expect contribution margins or gross profit margins in that region. So, but that will take us to get fully ramped up, and also the 120,000 ton step needs to be taken to get to that level. And I'd also say you can follow gross margin, of course, and you can follow our, we're publishing our volume sold per quarter, and you can see the net sales per quarter, so you can see roughly what the average price per quarter is. So that will be able to follow. And I think you see for quarter 4 we had around 14,500 SEK per ton was the average price. So.
Okay, great. And then I guess I just have one follow-up question regarding delivery and sales. How do you expect 2023 to play out? Are you expecting a large majority of your sales to go directly to your customer, Sanyu, or is it going to be also partially directly to different customers? How is the split there between existing agreements and direct to other clients and customers for the year?
That is a little bit about, it's going to go to different customers. We will not only sell to one, of course, but it also depends on how fast they adopt and how fast they actually pick up the ball. Sanyu has a head start because they have been running a lot of the material from Kristinehamn. They know how to run this type of pulp. They have also amended something within their operations in order to do so. So they are, a little bit ahead of the rest of the market. So we expect that we expect them to be the big part, but we also see others are coming up, and it's almost like a race on the market right now for who is going to get what. So there is a lot of ongoing discussions with customers, of course.
And just maybe as a follow-up on that, do you expect that to be reflected in further maybe potential partnerships or just directly sales?
Potentially, yes. But we also have to remember we will leave some volumes for spot because we want to understand what is the value of this product when it goes out. So we will not tie up everything. And we have 2/3 already tied up. So there's not a lot of room open for others, but we would like to have something on the spot market to be able to see what the value is, and I think that's a prudent way of going about with this, because I understand, of course, from the investment community, you want to reduce the risk, and we have reduced the risk enormously. If you look at where the company was approximately a year ago, the risk today with all these big contracts and so forth, as well as the plant operation built and run, the risk is it's a complete different world compared to where we were about a year ago. So, but with that, we also want to check the market on the prices, how much they could actually take.
Okay, great. Thank you very much. I think that's all.
Excellent. Thank you for that. And now we will switch over to the last analyst awaiting in the queue, and that will be Axel Persson from Nordea. Axel, can you hear us?
Yeah, sure.
Excellent. The floor is yours.
Hi, Axel.
Yeah, thanks. So my first question relates to production. So looking here in January, you produced 1,000 tons of dissolving pulp, and about half of that is defined as prime quality. So, of course, I guess it's of highest importance for you to get this, if you call it, yield up. But maybe if you could touch upon what's the discrepancy here between the production of dissolving pulp and also what's defined as prime quality. So, what's the quality parameters between those two that, that's required to get it up to prime quality?
That is mainly in accordance to or related to the viscosity. When you look at dissolving pulp, you produce, for example, one quality that we have is about 450 to 550 in viscosity. And viscosity has a relation to the dissolving capability of the pulp. So that is the major parameter that we're working on with that, and that is about keeping that stable. And when it comes to the other materials, let's say B prime or materials that is out of specification. That is a bit of a range of different materials that we have there. There's startup pulp, that is not really good for anything. But we also have materials in there that we can use for other applications as well. So and a third parameter that we're working on, which is actually not out of spec, is a little bit on the polyester separation. But there we are in spec. But what I also want to mention is when we look at the total spectrum of specifications that we are producing, we have very low metal contents. We have a very good solubility. So the technical words R10, R18 values are very good. The material operates very nicely within our own labs when we do the application testing. But what we also see is that it works well with customers. Stability of quality is always an important parameter in this industry, and that's what we kind of fine-tuning as we go forward.
And I guess that's pretty difficult to state some forecasts going into, the first and second quarter as well on what we could expect here in production versus prime quality production.
Yeah, but you can see we're approximately 20% now in capacity, and that about 50% is within specification. And we expect and we work for increasing that number as we go forward towards the 5,000 per month. And of course, more and more of the material should be in specification. And I also would like to relate back to Kristinehamn again. At Kristinehamn, we had 92% in spec, and that plant had less opportunities of producing within specification. So I believe that we know what we're doing. We just need to fine tune to get in there.
And touching on production again here, I mean, you have a quite significant amount of locked up cash, and I guess that's related to, reaching production targets. Can you elaborate a bit more on those targets?
Yeah, no, I can come back on that. So we had at the end of the year, you can see it's 175 million in reserved accounts, they're called. But of that, 50 million has been transferred already, so that's released. So there's 125 million in there as of today. Another 25 million will come out once we get to around 84% capacity utilization. So that's not the second half of the year. Before we expect it, and the rest will stay there for debt service for quite a while longer. So, one other point, Axel, just on the mention on the volume. So we obviously published in our report the volume for December and January, and I think we'd love to give an exact forecast, but we just can't obviously, and we don't give forecasts. But we will give monthly numbers in the beginning here, not forever, but in the beginning we'll give monthly numbers so that we'll be transparent about where we are, and you can see and we want to increase the monthly production, we want to increase the inspect volume, and we want to increase, of course, the revenue, the dispatches to customers. So that's you can see our progress month by month.
Yeah, great. And also on the Kristinehamn plant, will the reorganization change the throughput on that plant?
Yes, absolutely. I mean, the reorganization is that Kristinehamn was a production site. We were running that 24/5 throughout 2022. Now we are changing that site back to where it's supposed to be, which is a R&D site. So we're looking at process development, we're looking at R&D activities and so forth. And therefore we didn't need to have all those shifts working in the plant. So yes, we have discontinued the production in Kristinehamn because we have all this production in Ortviken. So it's a pretty much of a natural progression on Kristinehamn and Ortviken as Ortviken now is operational.
Yeah. And some final thoughts here from me on investments. So of course, very low incremental capex from the 60 to 20,000 ton plant. And maybe you could firstly describe just the machinery there, and I guess it's more bottleneck investments that's required. And so of course, very favorable terms when looking at capex figures. But what about operating costs? Do you need a lot of more personnel, or is it favorable there as well?
No, it's very favorable on both sides actually. The whole plant, the sizing of a plant here, you size it on the dryer. the dryer is sized for 120,000 tons. You know, we got that used dryer, and that shortened our build time with about, I would say, 18 to 24 months. So that is now up and running and operational, but that dryer is for 120,000 tons. So that meant that we sized most of the other equipment for 120,000 tons. But we have some areas where you have parallel units, for example, shredders. We have 3 shredders today, and it would mean that we would need to have another couple of, let's say, 1 or 2 shredders in order to get to 120,000 tons. So we have some areas within the plant where you have that. So that is why we have such a small capex from 60 to 120,000 tons. When it comes to OpEx, you know, we don't need more people on the shifts, apart from people that is actually loading in the bales and also loading out. So logistics, yes, there we need, and our estimation is there will be approximately 10, 15 people or so of the total that needs to be added on within the shifts, but not more than that. So it's very favorable on both sides.
Okay, great. That's all for me.
Right. Thank you so much. And I will take some questions here from the chat side, and maybe I'll throw in one, my own, to expose my complete ignorance, but extremely thrilling here. But there is one question regarding quality, and how do you keep track on the quality, and what would be the key issues to have a quality control?
Well, we have an online or inline quality control, of course, and we measuring the material in different steps throughout the process. We also have a quality control in the end of the plant, after the dryer, where you have it's kind of a ramp that actually gives a lot of different parameters, moisture, brightness, and so forth. But then we're also taking materials on every 3rd or 6th, I need to look into that, set, and a set is 6 bales. And then you take a material, you take some material from that set, or take a whole sheet, and then you go up to the lab, and then you do all those other parameters like metal content, they do reactivity, and so forth. So all those things we have that quality system in place, and it's working, and it's actually worked 24/7. So also the operators are trained in order to do those tests, and we of course put it into the SAP system for the quality measurement. So we have full control over that, as I would say, but you know, and that's what we're working on.
Yeah, but one would assume as you ramp up, then you need to increase even that, but you seem to have the house in order there, so to speak. Another question here is raw materials, and how much fabric would you need for a ton of circulose, roughly? Well,
if you take, you know that we are using materials that have some polyesters, so that depends on the polyester content. But let's say that we have 100% cotton coming into the plant. Then we get approximately 98% or so of circulose fibers out of it in the end. So that is, you know, or circulose pulp coming out in the end. We have some losses when it comes to fibers being flushed out in screening and in washing units and so forth. But I would say, difficult, let's say 96%, 98% or so of 100% cotton input is what comes out. But then you cannot calculate, of course, polyesters, buttons, and all those kind of things that we're actually taking out.
And given the fact here that you are ramping up quite substantially, what do you think about the ability to get the necessary materials for your future growth there? Supply, demand, I mean.
Yeah, it looks pretty good. We already have, I think it's more than 140,000 tons under contract.
Okay.
We have a lot of partners throughout the world. We can ramp that up even further. You know, towards the goals that we've set for ourselves, I don't see an issue there. We're also able to use a lot of different type of materials that goes into our process.
Okay. And can I just expose my ignorance here and try to find a peer group or competitors or comparables? How unique would you say that you are?
Well, when it comes to, we see there's two peer groups, I would say. One peer group would be, the dissolving pulp manufacturers that are trying to mix in some of textile pulp into their current pulp. There are maybe 20% or so today. That is, of course, their main business is wood. They're normally backward integrated into forestry.
Yes.
So this, topping up and getting a better price, which is good and so forth. The other one is, if you take the newcomers coming in, you can take Infinite Fibers, Spinova, and so forth. They are making a new type of fibers, and here we see them as customers, actually, rather than competitors. So we believe that we're quite unique. We are, of course, always investigating and looking at it. How far have they come, and so. And there's one company, for example, Sörling in the US, who have developed some technology that could be similar. But as far as we know, they haven't built their first pilot just yet. So it's quite far away. So we believe that we're still 5 to 7 years ahead of competition. And what's unique about NewCell is that we use 100% textiles into our process, and we produce a dissolving pulp that can actually just be as a drop-in product into the process of all our customers. They don't need to change.
Excellent. Well, yeah, to summarize it, I mean, this is a growing industry, of course, and it works hand in hand with the recycling, and you seem to have a very good head start, so that should be very interesting to follow, I think. Well, Patrik and Toby, thank you for a very educational and thrilling presentation, and I'd like to thank Carnegie, Handelsbanken, Pareto, and Nordea for the questions, and also the questions online. And with that, if the viewers would have any more questions, where should they go?
Yeah, we have. No, you can on our homepage. You can see we have. You can email us through the homepage to the investor email address, and very happy to answer questions and follow-up questions if you have them. So.
And also, may I just then add that you have an excellent investment case on the investment page there.
Thank you.
It's I appreciate that, because as a moderator you get the hang of it. So full marks there.
Yeah.
Right. So with that, I would thank everybody watching and everybody asking questions, and see you later. Goodbye.
Thank you. Bye bye.